Uzbekistan's economy has been on an absolute tear, growing at a blistering pace. But as you know, that kind of rapid growth carries a serious risk of burnout. So today, we're going to break down the central bank's bold strategy to cool things down without killing all that momentum, using their 2025 outlook as our guide.
It all really boils down to this one single number, 5%. This is the big one. It's the central bank's inflation target, the ultimate goal they are shooting for in the medium term. You see, if they can hit this, it means price stability, and that lets people and businesses actually plan for the future without constantly worrying about skyrocketing costs.
But, and this is the big question, right? Hitting that 5% target is no easy feat, especially with the economy just roaring ahead like it is. It creates this classic economic dilemma. How do you put the brakes on inflation without stalling out all that powerful growth?
Okay, so to really get the plan, we first have to understand the puzzle they're trying to solve. Let's dig into the core challenge Uzbekistan was staring down in 2025.
So check this out. In the first 9 months of 2025, Uzbekistan's economy grew by a staggering 7.6%. And this wasn't just in one little area. No, we're talking about a huge surge in services, a massive construction boom, and just a ton of investment pouring into the country.
Yeah, I mean, the economy was absolutely firing on all cylinders. This wasn't some abstract number on a spreadsheet. You could feel it on the ground. Consumer demand was incredibly strong. Foreign investment flooded in, hitting over $14 billion. And the retail sector, it was just booming, with sales up by double digits. The whole place was humming.
But there's always a but, isn't there? Here's the other side of that coin. By September of 2025, inflation was still stubbornly high at 8%. Now, it had come down a little bit, but it was still way above that 5% target. And that is a major headache for policymakers.
And that right there brings us to the core of the economic puzzle. How do you balance that incredible growth with this persistent inflation? The real challenge is finding that sweet spot, taming those rising prices without completely derailing the economy's momentum.
All right, so this is where the Central Bank of Uzbekistan steps into the picture. Faced with this exact problem, they came up with a very clear playbook to tackle it head-on.
To put it simply, their strategy was to just gently tap the brakes on the economy. In economic terms, they call this tightening monetary policy. The whole idea is to make it a little more expensive to borrow money. The thinking is that encourages people to save a bit more and spend a bit less, which in turn helps cool down that overheated demand.
And their biggest tool for doing this? The main policy rate. In March of 2025, the central bank made a pretty decisive move, raising its key interest rate to 14%. Now, an action like that sends ripples to the entire financial system, influencing the rates for everything from business loans to your personal savings accounts.
And you can actually see the impact of their actions right here in this chart from the central bank. See how at the start of the year, a lot of these indicators are in the red and yellow zones? That signals loose monetary conditions. But after that March rate hike, you can see these key metrics, especially the real policy rate, which is the interest rate adjusted for inflation, they start shifting into the green, tight zone. It's a really clear visual that the policy was successfully taking effect.
So with that action taken, how does this all translate into their long-term forecast? Let's take a look at the path from that stubborn 8% inflation down to that magic 5%.
Now, the plan isn't for some sudden overnight drop. It's a gradual, multi-year journey. The forecast shows inflation landing at around 8% by the end of 2025. Then they'll methodically step it down to 7% in 2026 before finally reaching that 5% target somewhere in the 2027 to 2028 timeframe.
And this is super important. This isn't about stopping the economy in its tracks. The goal is to guide it to what economists call a soft landing. The baseline forecast sees that red-hot 7.6% growth moderating to a more stable and sustainable pace of around 5.5 to 6.5%. This is the sweet spot they're aiming for, solid growth, but without those crazy inflationary side effects.
Of course, no economic forecast is ever a sure thing. The central bank is also being very clear about the potential risks and headwinds that could knock their plan off course.
They've identified several key risks. A sharp drop in the price of gold, a major export, could really hurt revenues. A widening fiscal deficit, that's the government spending more than it's taking in, could also fuel inflation. Other risks include things like unstable currencies and key trading partners, potential energy supply disruptions, and even worsening climate conditions that could impact agriculture.
But here's the thing.
Achieving lasting stability requires more than just adjusting interest rates. The central bank is also stressing the need for deeper, more fundamental changes to the economy itself.
They call these structural reforms. So what does that really mean? Well, think of it like rewiring the economy to be more efficient. We're talking about things like selling off state-owned companies to private owners who actually have to compete for customers. That kind of competition is a powerful long-term force against inflation because it pushes businesses to offer better products at lower prices. It's about building a more resilient and productive economy from the ground up.
So, here's the key takeaway from all this. While the central bank's interest rate policies are absolutely crucial for short-term stability, long-term success hinges on a two-pronged approach. It requires both that smart monetary policy and the successful implementation of these deeper structural reforms. So, Uzbekistan has a clear roadmap and a pretty realistic view of the challenges ahead. The ultimate question is whether it can navigate these risks to achieve that elusive economic sweet spot, a future with both a thriving economy and stable prices. Only time will tell if this ambitious plan will succeed.